guys, so in last video we had covered the total portion of PGBP. So in this we will cover all the expenses allowed to the business. So expenses allowed to debit and P&L. If you had paid any insurance premium for stock, including livestock, it means horses. If you had taken insurance for them, then also that insurance expense is allowable. If you had paid any medical insurance of employee, but if you had paid in cash, IC will play here that if you had paid in cash, then this expense is not allowed to debit in P&L. But if you had paid in cash, but if you had not paid in cash, then this expense is allowed in the. And then in bonus and commission, paid to employees, it must meet the criteria of section 43B, which I had explained in the first part 1 video. It may exceed from the payment of bonus act. IC will also play this here. It will say that under payment of bonus act, bonus will be maximum 8 lakh, but the company had paid 10 lakh bonus to the employees. So in that case, you have to allow 10 lakh. You don't have to be like as per law it is about the laws, so you don't have to make confusion in your mind. If it is more than, then you have also allowed that bonus. If interest on loan from business and profession, if interest on loan for business and profession, but and second condition, if that is loan is from scheduled bank, financial institution, and include NBFC, and it has meet the criteria of section 43B. So you have checked 3 conditions. Interest on loan for it is for the purpose of business and profession, it is loan for scheduled bank, financial institution, or include NBFC, and it has meet the criteria of section 43B. Then only okay. Then if loan taken for asset, if loan is taken for asset, then that interest up to date, the asset is ready to put to use. Not ready to use, ready to put to use. Most important, that amount will be capitalized. It will not allow as deduction, it is allowed as depreciation. Okay. And this discount on zero coupon bond, if there is any discount on zero coupon bond, then it will be allowed on pro rata basis. Over life of zero coupon bond, it will not be allowed on its first year. Okay. And then employee contribution to SPF, RPF, ASF, AGF, and any other approved fund, subject to section 43B, which I had explained you yesterday. Sorry, in the last part. Employee contribution to NPS under section 80 CCD. Important adjustment that lower is the amount contributed and 10% of RB in case of old regime. And in new regime, amount contributed 14% of retirement benefit salary. Okay, most important. Okay. And if then employee contribution deducted by employee from his salary allowed. If employee had contributed and deduction by employee from his, then employee has deducted from his salary. If employee had deposited same amount up to due date, what is the due date? 15,000 next month. If amount is deposited after due date, then it will be PGBP income, and this expense is not allowed to the employer. Okay. And then treatment of bad debt. Most important, bad debt. Bad debt is allowed in deduction, but provision for bad debt is not allowed. And bad debts recovered, it is income or recovery here. Okay. And then family planning expenditure. This family planning expenditure IC used to ask in every RTP, MTP, or PYQ. This family planning expenditure is only available to the company SSC, not to the individual. Okay, IC always play the game here that it is individual SSC or company SSC. You have to identify first. And if it is revenue expenditure, you have to allow fully. But if it is related to capital expenditure, then it is allowed in 5 installments, same as in voluntary retirement scheme. Okay, if STT is security transaction paid or commodity transaction tax is paid, it is allowed as deduction, because everywhere you have studied that STT, CTT is not allowed, but here STT and CTT deduction allowed if security and commodity are stock and trade. Okay. And then under section 35D, I explained you that all preliminary expenses under section 35D, then salary employees, rent of premises, and interest on borrowed capital are not preliminary expenses. If you are not come in the business, then you are paying salary to employees and rent of premises and interest on borrowed capital. These are not allowed as preliminary expenses, and you cannot claim these as expenses. Okay. And then section 37. If you are doing advertisement, if advertisement is in revenue nature, then it is allowed. And advertisement is in capital in nature, then depreciation allowed. Expenses is not allowed, it is allowed at depreciation. Important. Okay. And then expenses of boarding, lodging of business and profession, it allowed. Deduction salary of employees, and expenses of employee entertainment. Expense of employee entertainment is also allowed. opening ceremony like Muhurat, this is also allowed. Expenses for employee on festival, like some employees get some free TV on the occasion on Diwali, Holi, which you have seen on the reels. Okay, and then interest on late payment of GST is allowed at deduction, but if you are paying interest on late payment of income tax, then it is not allowed. Okay, if you are paying any expenses or legal proceeding, it is allowed. Professional tax paid, it is allowed. Expenses on filing of ITR, expense of filing of ITR, it is allowed. An audit fee, it is allowed. And expenses of scheme and insurance policy, it is allowed. This is important and this is important. Okay, and then which are the expenses not allowed addition? Most important, CSI expenditure. You will see CSI expense adjustment in every third or fourth question of every total income question. The CSI expenses is, if done by company, it is not allowed deduction. Advertisement in brochure of political party, it is not allowed. Okay, advertisement of revenue capital nature, it is different. It is for business and profession. But if you are advertising in brochure of political party, then it is not allowed. Penalty for breach of law, it is not allowed. But if it is a breach of contract, then it is allowed. Interest on loan taken from payment of income tax, if you are taking any loan and you are paying interest or payment of income tax, then it is not allowed. Illegal expense like hafta bribe, it is not allowed. Expenses for setting legal proceeding of central government, it is not allowed. Only business expenses under section 38, only business expenses are allowed and personal expenses are not allowed. For example, there is what I say will see. I say will tell there is an expense which include 60% business related and 40% personal related. Then you have to bifurcate. 60% it is allowed expense and 40% you have to disallow. And payment on which TDS apply. And then under section where payment on which TDS is apply, if you have to recall that TDS provision, that TDS is applicable on this or not. Okay, if there is applicability of TDS, when disallowance is accepted, the IC will give you these two adjustment. Okay, if not deducted up to 31st March of previous year. Okay, and TDS not deposited up to return filing date. If two conditions: first, not deducted up to you have to deduct up to 31st March and you have to deposit up to return filing date. Deduct up to 31st March and deposit up to return filing date. If that payment is made to resident without deducting TDS, then 30% of the expense is disallowed and 70% you can allow as expense. And if payment made to non-resident without TDS, then 100% of its payment made to non-resident without TDS, it is 100% disallowed. No disallowance is allowed if assessee financial return. If assessee is furnishing return that these on this amount that tax is already paid in the income tax return. Okay, if question will say this line, then you have to allow that expense. And if it has not furnished return, then you does not allow that expense 100%. Okay,